Hello everybody, my name is Lena Winquet. Today we're going to be talking about financial statements. So whenever you're doing any form of business, no matter if it's big or not, as soon as you gain any profit from it or as soon as you spend any money for it, there you go. You need to have what's called as financial statement. There's a job necessarily in finance that's really necessary to the benefits, to the profits of the whole country, like an accountant, right? And so what do business peoples look at? What do accountants, what do CEO, what do boss looks at to ensure that their business is actually on the right road, or whether or not are their business doing anything sus. So today we're going to be talking about financial statement. So there are three forms of being able to record down the business budget and the business finance, etc., which are balance sheets, income statements, and statement of cash flow. So first, what is balance sheet? Balance sheet is the basic overview of the whole business, of the entire business. So what does a balance sheet include? A balance sheet includes, first is the assets, which is the value of the which is the value of the business. Second is the liabilities, which are the debt of the planet, which is the debt of the business. And lastly is shareholder equities, which means is money that comes from ownership of the business. So usually they are represented in a form of something almost like a spreadsheet. So there will be columns, there will be rows, there will be each section for each things, and there will be the amount of numbers listed down on there. And so what's so important about balance sheets is that it's going to be able to be the very first thing that business owners look at in the very first second when they want to be able to check with their finance, or they want to be able to look at their business and how it's going. And so that is the main source of being able to check on whether or not is a business working properly or not. Secondly comes to income statement. Income statements, you can understand it as the things that comes into the business. So what do you gain from the business? So income statements could include a lot of things. And this is the part where accountants and boss looks at to be able to understand on whether or not are their business actually making any profit. And so here it is the part where you combine all the characteristics together. First is the sales and the goods sold. So basically the amount of money that you get from selling your product or from customers paying for your product, paying for your service. That is the first characteristic. Second is the expenses and the taxes. So are there any expenses of the product? Like when you manage something, when you do like a mass production, or when you do anything like that, that is expensive. Or in business there's going to be taxes, right? Not everything you earn will be free. Like you do not get everything of it. You would need to pay some for the government, and you also and that is what called as taxes. But you also need to pay some for your employees, and so those are the expenses and the taxes. And so you combine those together, you add, you plus together, and if you get like a positive amount or a very decent amount, that means that is that the profit of your business. But if it gets negative, then that means your business is actually losing money, and that you really need to come up with a better strategy. And lastly is statement of cash flow, or cash flow. You usually hear of it as cash flow statement. So statement of cash flow is whether or not the cash comes into your business or comes out of your business. So it is usually divided into three parts. First is the operations. So in your business, you're probably going to have mass productions, you're probably going to have policies of your employees, or of each branches of retirement, or of human labor. And so that is the operation. Second is the investment. In your business, not always will your business money be staying there. Like it would not just go into like a bank account, or it would go into a safe place and stay like that forever. No, as I've said before, if you want to be a business owner and a successful one, you need to know how to take risks, right? And that is when investment skills come in. That is when the ownership smartly takes an investment and invest that into something. So it could be investing into Bitcoin, or it could be investing into a new strategy, invest into a new service, a new product, or a brand new production branch, things like that. That is the investment. And whether or not will the business benefit from it or not, that's the part of the owner, and that's the part of the investment people that actually make those investments to be able to be careful about. And lastly is financing, which is there's going to be other things like you need to pay for your employees, you need to buy expenses, you need to buy resources, etc. So that is where financing comes in. And statement of cash flow is basically the cash flows that comes in that you would need for your business or you would not need for your business. Or basically, it's the money that comes in your business or not come into your business. And that today we've looked through 3 things that every accountant, every business owner, every single business needs to be able to look at, need to be able to analyze, to predict, to manage it in order to be able to hold about what is their business actually going like. Is it going good? Is it going bad? Do we need any strategy changes? Which are balance sheets, income statement, and statement of cash flow. Thank you for listening, and goodbye.